Good evening and welcome to the Senior Health Network. I'm Peter Janes. If you're 65 or older and filed taxes last year, there's a good chance you may have paid more in taxes than necessary. I'm not talking about some complicated loophole or special program you have to apply for. This is an automatic deduction built right into the tax code that many seniors simply don't know about. You may also be seeing a lot of confusing headlines right now about senior tax breaks. Some of that information can be unclear or incomplete, which is why here at Senior Health Network, we always go directly to the IRS itself. The truth is, the IRS already allows an additional standard deduction for people your age, but it often gets missed because it's not flagged separately on your tax forms. When this deduction isn't applied, it can mean paying more in taxes than the law actually requires. What we're covering tonight is not speculation or headlines. It's what the IRS officially allows under current law for the 2026 filing season. Let me hand this over to our senior health correspondent, David Langford, who's going to break down exactly what this deduction is and how to make sure you're getting it.
Thanks, Peter. Before we get into the details, it's important to clarify something. There's a difference between tax ideas that get discussed publicly and tax rules that are actually implemented and enforceable by the IRS. Everything we're discussing here comes directly from official IRS guidance, not proposals, not commentary, and not political debate. What we're talking about is what the IRS officially calls the Additional Standard Deduction for age. You can find this documented in IRS Tax Topic 551, IRS Publication 554, and in the instructions for Form 1040. For the current tax year, the IRS allows an additional standard deduction for seniors that's roughly $1,500 to $1,850 per qualifying person, depending on your filing status. The exact amount can change from year to year, so these numbers aren't permanent, but they accurately reflect what the IRS currently allows. This additional deduction applies only if you take the standard deduction, rather than itemizing your expenses. Most seniors take the standard deduction because medical expenses are only deductible after they exceed a percentage of income, which many people never reach. Here's how this works. Once you turn 65, you automatically qualify for this additional amount on top of the regular standard deduction. If you're married and both spouses are 65 or older, the additional deduction applies to both of you. The IRS determines eligibility based on your age as of December 31st of the tax year. The reason this deduction sometimes gets missed is that it's built into the tax preparation process rather than being flagged as a separate line item. Many tax software programs and preparers apply it automatically, but issues can occur if age information isn't entered correctly or reviewed carefully. It's important to understand that this is not an obscure or temporary tax strategy. It's a straightforward provision in the tax code designed to provide additional relief for older taxpayers. The IRS recognizes that many seniors live on fixed incomes and face unique financial pressures. What makes this especially frustrating is that you might never realize it was missed. Your return gets processed, you receive a refund or pay what's due, and everything appears fine. But if that age-based deduction wasn't applied, you may have paid more than required. That additional deduction can make a real difference. Depending on your tax bracket, it can translate into hundreds of dollars in tax savings. For seniors relying on Social Security and retirement income, that money matters. This deduction has existed for years, yet awareness remains low. Because the additional amount is rolled into the standard deduction total, many seniors don't realize there's a separate age-based component at all. That brings us to what you can do to make sure this deduction is applied correctly. Taking action to ensure you get this deduction. The first step is having a simple conversation with whoever prepares your taxes. That might be a professional tax preparer, an accountant, or even a trusted family member helping with tax software. Ask directly, am I receiving the additional standard deduction for being 65 or older? Don't assume it's been checked automatically. Next, ask, can you show me where this additional deduction appears on my return? Seeing it documented helps you understand how it's applied and confirms it's included. Then ask, what is the dollar amount of my age-related additional standard deduction this year? Knowing the amount allows you to confirm it aligns with current IRS guidance. These are reasonable questions. Any qualified tax preparer should be able to answer them clearly and show you where this information appears. There are also two simple steps you can take on your own. First, print or save IRS Publication 554 or Tax Topic 551 and bring it with you to your tax appointment. That way, you and your preparer are referencing the same official IRS information. This isn't about questioning anyone's expertise, it's about clarity. Second, confirm that your birth date is entered correctly in the tax software. Age is what triggers this deduction, and even a small data entry error can affect whether it's applied. If you prepare your own taxes using software, look closely at the personal information section. Most programs ask for your birth date early and calculate age-based deductions automatically from that information. If you believe this deduction may not have been applied in past years, that's a conversation to have with a qualified tax professional. What matters most is making sure it's handled correctly going forward. This is money you're legally entitled to keep under IRS rules. Back to you, Peter.
Thank you, David. As we've shown tonight, there can be a lot of confusing information circulating about senior tax breaks. That's why here at Senior Health Network, we go straight to official IRS guidance and focus on what's actually written into law. Everything we've covered today comes directly from IRS Tax Topic 551, IRS Publication 554, and the Form 1040 instructions for the 2026 filing season. This information is educational and not professional tax advice. Tax rules can change, and how they apply depends on individual circumstances, so always verify current IRS guidance or consult a qualified tax professional before filing. If this helped you better understand how the tax system works for seniors, subscribe to the channel. We focus on practical, trustworthy information designed to help protect your financial security in retirement. For the Senior Health Network, I'm Peter Janes. Good night.
Hello, I'm David Langford. As we wrap up, remember that everything we share here on the Senior Health Network is meant to support your health, your strength, and your independence. Our information comes from verified medical research and trusted scientific sources, presented in a clear and practical way. Your health needs are unique, so always talk with your doctor before starting new exercises or making changes to your diet or medications. And if something doesn't feel right, stop, rest, and listen to your body. Some of the visuals and narration in this program are created with AI to help explain important topics more clearly, but every message is grounded in evidence. Thank you for watching, and take good care of yourself.